Well, good morning, everyone. We're waiting for everyone to kind of get logged in here, and we'll begin the program in about 2 minutes. Well, good morning, everybody. I'm Tim Damon with the Lansing Regional Chamber of Commerce. I want to thank you for joining us for today's program focused on the CARES Act and the better understanding of this $2 trillion economic package and the impact not only to our employers and small businesses, but as well as our employees and individuals as well throughout the country. We're pleased to be joined this morning by Kevin Courtois. Kevin's the Executive Director of the Great Lakes Regional Office with the U.S. Chamber of Commerce, and Kevin and his team at the U.S. Chamber have just been phenomenal over the past few weeks in helping guide not only all of their members across the country in the business community, but all the chambers as well, both regional and state chambers, with a tremendous amount of resources and knowledge and information that we've been able to kind of repurpose and continue to share with our business community here in the region as well. Just a few housekeeping notes before we begin the program. By now, and Kevin and I were just chatting on how this has changed the dynamics of business and how we're communicating and interacting with all of our members and business community. So a number of us have participated probably in more webinars in the past couple of weeks than we have in our entire career. We do have everyone on the call is muted. There is at the bottom of your screen, there should be a question and answer icon and button. If you have a question anytime throughout Kevin's presentation, if you could please submit the question via that avenue. We will kind of moderate those questions at the end of Kevin's presentation, and we will certainly try and get to as many of those questions as we possibly can. Also, too, I would like to welcome and thank the Jackson County Chamber of Commerce coming in as a partner for today's program as well. And so there may be a number of members from our friends just south of Lansing here as well, and that all-important US 127 corridor as well. So at this time, I'm going to turn it over to Kevin, and we'll let Kevin get through his presentation, and we'll look forward to kind of some dialogue and Q&A at the end of the presentation. Thank you, and Kevin, welcome, and thank you for joining us this morning.
Thank you, Tim. Good morning, everyone. Thanks to Tim, Steve, and the Lansing Chamber, and Mindy at the Jackson Chamber. Appreciate you guys coming together and partnering on this event. As you might imagine, there's been high demand for kind of everyone out there to start learning more about what's in the CARES Act. This bill, sometimes called the Phase 3 bill or the federal stimulus package here, is the third bill passed in response to the coronavirus pandemic. So what I'm going to do, I think we're just going to dive right in here. I'm going to go ahead and share my screen. Let's see. And I'm going to stop my video here so we can focus on these slides. I promise I'll be back when we return, but. All right, so just to give you an idea here of the scale of this package, it's a $2 trillion package, which is just under 10% of our regular GDP in the United States here. Now this package, it's designed to be robust because what we want this to do, we want it to be a bridge that helps us avoid a prolonged recession or downturn. That really will allow us to get back to regular commerce, whenever that may be. In addition to the $2 trillion in the face value of the package, because some of the funds can be used by the Federal Reserve, it can be leveraged to provide an additional $4 trillion in support of the economy. Now, we'll talk a little bit about the individual provisions, perhaps the most important being these automatic payments that the federal government is making to individual taxpayers. The government will begin the process of direct depositing these funds to taxpayers really across the country in the amount of $1,200 for individuals and $2,400 for joint returns, plus $500 per child. Now this begins to phase out for incomes above $75,000 for individuals and $150,000 in joint income. So we already know, as you've seen over the last couple of weeks, there have been over 10 million initial unemployment claims over the last couple of weeks. And we know that as much as we may do to support businesses, we're going to see a rise in unemployment, irrespective of what we're doing. So this bill does include some fairly robust expansions of the unemployment benefits. Perhaps most importantly, those most restrictions on eligibility for unemployment. So if you remember, if you're going through unemployment, you apply for assistance, and then there are all these qualifications about how long you've been employed, how long you have to wait, et cetera. So those eligibility requirements have been amended as it's related to coronavirus. In addition, the federal government is providing another $600 on top of the regular state benefit through July 31st. States simply just have to agree to accept this additional benefit for the residents. A lot of questions have come up about whether or not individuals will remain on unemployment, particularly given this enhanced benefit, the $600 add-on. Perhaps they'll be making more on unemployment than they would at their job. So I think it's important to remember here that eligibility ends when an individual can return to work. So if an employer is reopening and calling employees back and that employee is available to work and then they choose not to work, then their individual eligibility ends at that point. So for unemployment, how do you access this? This still goes through the state unemployment office. So you don't go to the federal government. You do go to the state unemployment office as you would otherwise. So let's talk about the major provisions for employers. And we've really broken this down into 3 groups here. You'll see the provisions are available. We have the provisions that are available to all employers, the provisions available to larger employers, and then small businesses, self-employed, independent contractors, and nonprofits. And that's where we're going to spend the bulk of our time today. All right, so we'll start with the provisions here available to all employers. The first is a payroll tax provision for employers who pay the payroll taxes. So if you think about this, everyone who's writing a check to their employees, after you write that check, you normally write another check to the federal government covering the payroll taxes for both the employee and the employer side. Under this bill, an employer may choose to delay their payment of the portion of the payroll taxes, which is 6.2% of Social Security wages. They can delay paying that between now and January 1st, 2021. If they choose to delay that, they have to pay 50% of the accumulated amounts that would have been owed by December 31st, 2021, and then the remaining 50% on December 31st, 2022. Now, there's an important caveat here. So this generally is available to all employers, except if you've had a loan forgiven under the Paycheck Protection Program, which is the small business loan program that we'll talk about a little bit later. Other tax changes that are important, net operating losses. So if you have a business who has an operating loss and you want to be able to use this against prior taxes paid, so now operating losses are expanded from 2018, 2019, and 2020, and generally can be carried back for 5 years. This also applies to pass-throughs and sole proprietors. So if you're a business, and this is primarily for corporations that have AMT credits, you can accelerate the recovery of those. You also have the opportunity to increase your interest deductibility for 2019 and 2020. And importantly, for restaurants and retail establishments who in the past couple of years may have made investments in their property, they can accelerate the recovery of that. All of these provisions really are centered on one idea, and that's improving liquidity for employers. So at this moment when employers may have reduced revenue or perhaps no revenue coming in, it's really hard to pay the bills. So all of these provisions give employers greater access to liquidity. And we're going to start seeing themes throughout here, themes through provisions of this bill as a whole. And this part in particular, it's not so much about reducing overall taxes as it is about timing. So we're giving employers more access to the cash they have today to be able to pay their employees. So another provision that's available to all employers, this is the employee retention credit. Now, this was a late addition to the bill, so the early draft did not include this provision. So as a result, I don't think there's been a lot of attention paid to it. But the retention credit generally applies to all to employers. So we're talking about businesses, but also nonprofits, for example, who are fully or partially shut down as a result of the coronavirus, or have had a 50% drop in their gross receipts in a quarter, and they're eligible for this until their gross receipts get back to 80% of the prior year's amounts. So if you think about this, this is designed to help employers who've shut down or lost revenue continue to pay their employees. And this is a response also, as you see state by state, as we have these stay-at-home orders. This is a response to that type of situation. So how much is this credit worth? It's 50% of the wages paid by the employer, up to $10,000 per employee, and that's a fully refundable tax credit. So you can really think about this as a $5,000 tax credit available to the employer. Now, there are special rules here for employers with more than 100 employees and employers with less than 100 employees. If you have more than 100 employees, the benefit only applies to employees who you are paying but are not providing services. So if you think about it this way, your business is shut down, you've had a drop in revenue, your employee is not working, they're not teleworking, but you continue to pay them, you can access this credit as a benefit in recognition of the fact that you've paid them. Now, if you have 100 or less employees, that requirement that they not be providing services does not apply. So it's available to all employees that you pay during that eligible period. And as a reminder, that eligible period is when you're shut down or when you have a quarter with this drop of gross receipts relative to the prior year. Importantly, again, here, that Paycheck Protection Program, this is the small business loan / grant program that we'll talk about. If you receive one of those loans, because it can be converted into a grant, you cannot take advantage of the employee retention credit. We understand that employers may have cash flow problems, and one of the things for employers who take advantage of this is we expect Treasury will be providing some guidance that will allow employers to get in advance on the payment of the credit, which will help them pay employees today. All right, so let's talk about mid-sized and larger employers. So the Phase 3 bill in total included $500 billion to the Treasury Department to support loans, loan guarantees, and Federal Reserve credit facilities. So these credit facilities, you may have read about them. These are the things the Federal Reserve is creating, for example, to support commercial paper, money market funds, and they really do this in the regular course of business when we have a financial crisis. For instance, they use them robustly in 2008. $454 billion of that 500 is directly for businesses at large. Now, there are special programs for airline industry and critical national security businesses, and that makes up the remainder from 454 to 500. We do expect soon here we'll see that the Federal Reserve will issue more guidance about these credit facilities and actually launch them, including the terms and conditions. And remember, for this provision here, it's not going to be a situation where the company is going directly to the Treasury Department or the Federal Reserve. Instead, what the Federal Reserve is doing is supporting the financial institutions, across the country for them to make loans available. There are some restrictions that go along with this in exchange for accepting the benefit. That could include stock buybacks by the company, as long as the loan's pending or for an additional year. There's also limits on increasing executive compensation. All right, so this is where we're going to spend the bulk of our time here on dealing with small businesses, self-employed, independent contractors, and nonprofits. So the provision that's been getting the most attention, and I've received maybe a few questions in advance here, but it's been about the Paycheck Protection Program. So this is a $349 billion in loans for small businesses. So that's generally defined as employers with less than 500 employees. We have 501c3s, the self-employed, sole proprietors, and independent contractors. So a way of thinking about this is if your business generally is qualified for an SBA program, you're going to qualify under this program. And in addition to that, some employers, so some businesses who would not qualify have been added to that list. And that includes, for example, the independent contractors and self-employed. Now, it also includes restaurants and hotels who would otherwise be ineligible because if you add up all the locations, they would have more than 500 employees. So under this bill, it says we're not going to judge you if you're in the accommodation and the food service business in the aggregate, but we're going to judge you on a per location basis. So it's important to remember, don't think that just because you're not eligible, you wouldn't be eligible otherwise in the small business loan program, that you're not eligible for this Paycheck Protection Program. Now, how much can you borrow? You can borrow up to 2.5 months of your average payroll expenses. So there's a formula to calculate average monthly payroll. And once that's calculated, you multiply that by 2.5, and then the loan can't exceed $10 million. Where will you get the loan? So you may have read about this as the rollout happened on last Friday, so April 3rd. But a lot of folks were saying, do I go to the SBA? That's not the case for this loan. So instead, you're going to be going to your local or national lender. So whoever you currently bank with, you may have already had these conversations to see if they're participating in these loans. Lenders who were already part of the SBA 7A program, they're already lending through that program, they are automatically qualified to provide these loans. So in addition, the Treasury Secretary was given authority to designate other lenders, and we're seeing more and more lenders added by the day. So really, we expect to see a very generous designation of the number of lenders, in part because this is such a generous loan program and it is backed 100% by the federal government. Now, there are very minimal requirements as far as underwriting these loans. No collateral is required, no personal guarantee is required, and really a unique feature of these loans getting a lot of attention is that the loans can be converted into grants based off of what the borrower spends money on. So the way this bill is laid out, it looks at the 8 weeks of your expenses after the date of the origination of the loan, and you get to tally up everything that you spent on payroll and that you spent on rent for business, interest on mortgages that's tied to the business, and what you spent on utilities, and you can get dollar for dollar forgiveness of your loan up to that amount. And of course, your loan forgiveness can't exceed the amount actually borrowed, and you'll see an additional guidance that Treasury released. They're calculating the amount spent on rent and mortgage and utilities, that it can't exceed 25% of the total amount of the loan. It's an additional detail we got late last week in an effort to simplify this. It kind of deviated from the legislative language that we saw passed. Now, there are some conditions. So your loan forgiveness is reduced proportionately if you reduce the number of employees that you have relative to a benchmark period. That's either the year before or the first 2 months of this year. And the loan forgiveness is also reduced if you reduce wages for employees making less than $100,000 by more than 25%. I guess that's a good point or note about $100,000. So in your calculation of the payroll expenses, you get to count the first $100,000 that you pay to employees, but nothing beyond that. So this is really targeted to the middle income earners. Now, employers can also avoid that reduction in the forgiveness. We know a lot of employers have already had to lay people off. So if they bring back employees and restore their wages, and this is kind of generally within 30 days of the bill passing, and you maintain those employees and maintain those wages through June 30th, then you can avoid that reduction in the forgiveness. If you think about it this way, what the government is incentivizing is it wants to give the money through small businesses, to pay their employees, to keep people on the payroll. So we often get asked, what if a business is shut down, or what if you happen to be in an area where the governor said non-essential businesses can't open? Now, that doesn't matter for the purpose of this loan. What the loan looks at is, after taking the loan, were you paying your employees? And remember, we're thinking about the goal of this bill. So what lawmakers were thinking in creating this program was to provide assistance essentially in the form of grants to small businesses and encourage those small businesses to keep paying their employees. So U.S. Chamber put together this guide here, and I have a link to it, and I'm sure the Lansing and Jackson Chambers have circulated this, and we've continued to update it as guidance comes out from the SBA. But we released this. It's really a 4-step guide to prepare everyone looking at these loans. It goes through in detail who is eligible, how you calculate your average monthly payroll costs, what your lender might be looking for when you show up to apply for the loan, and how your forgiveness could be calculated. One of the things we're doing at the U.S. Chamber is really encouraging small businesses to understand whether they're eligible for this program, and then think about what loan forgiveness might look like in your situation, on the back end, as you make a decision about whether or not to apply for one of these loan programs. All right, so another provision that benefits small businesses, in addition to the self-employed, independent contractors, and nonprofits, this is the SBA Economic Injury Disaster Loan. You may know them as the EIDL loan, EIDL. EIDL loans have been around for a long time. If you're affected by a tornado or other natural disaster, for example, you might have applied or received one of these EIDL loans. And who's eligible? So small businesses and nonprofits, and that includes faith-based. There's no restrictions here on the types of nonprofits that can apply to any entity that is a nonprofit that has fewer than 500 employees, and again, sole proprietors and independent contractors. So this one is an actual loan. This is not a loan that in general converts to a grant. You can borrow up to $2 million in working capital that's repaid over 30 years. And you can see the interest rates there on the screen, 3.75% for businesses, 2.75% for nonprofits. Now, if you take this loan, payments are deferred for up to a year, so you don't have to immediately start paying on this loan. Now, they did make it easier for individuals and businesses to apply. So your loan is going to be based on your credit scores. You don't have to immediately produce tax returns. And you can get up to $200,000 without a personal guarantee, and no collateral is required for $25,000 or less. Beyond that, there's general security interest, or sometimes, it's secured with real estate, but they're trying to move away from the real estate in this particular instance. Now, this is an important feature really that is brand new as a result of the CARES Act. So if you are applying for an EIDL loan, one of the features included from the CARES Act is that you can request that you be provided with an emergency grant, which the government has to provide in 3 days or less, and this grant can be up to $10,000. So the bill details what you may use the grant for, but really there's no requirement that is detailed in the legislative language. Now we'll see what the SBA comes out with, if they have any further guidance, but really this $10,000 grant does not have to be repaid, and even if you are subsequently denied the loan. So if you apply for the loan, you request the emergency grant, you receive it, and you're denied the loan, you still don't have to pay back the $10,000. You should think about this really as essentially an emergency grant for small businesses. So there's some important interactions here with the Paycheck Protection Program that we just talked about. For example, if you end up with both, and generally you would end up with both because you've already gotten an EIDL loan and maybe now the Paycheck Protection laws are being set up and you're applying for those, you can roll them together, but you can't get double forgiveness with the $10,000 emergency grant. That would come off of the Paycheck Protection Program's forgiveness. There's also some requirements with respect to the Paycheck Protection loans that you can't double dip. So in other words, you can't take out two loans to pay the same bills. And if you're thinking about both of these loans, so EIDL and Paycheck Protection Program, you're going to want to think through some of those restrictions. So don't just assume you can take out all these programs and just stack them up. Really what they've done with the Paycheck Protection Program is make that the most favorable and tack down other programs that don't avail themselves to the Paycheck Protection loan, and that includes this EIDL loan. So for this one, you don't apply for this by going to your local bank. You apply for this on the SBA website at sba.gov. And this is one where chambers and 501c6s are also eligible to apply. Chambers can also receive the employee retention credit, but they have to be substantially shut down, or the reduction in revenue relative to the prior period. So you want to think about that also when you're going through the tax portions. All right, so with respect to small businesses, there are also some provisions we received a lot of questions on that didn't come from the CARES Act. That came from the Families First Act, which was the prior bill, so it was often referred to as a Phase 2 bill. And what the Phase 2 bill included was a requirement that employers with less than 500 employees provide paid sick leave, 10 days of paid sick leave to their employees if it's related to the coronavirus. Now, sick leave is taken when you're ill, when you're quarantined, or if you need to take care of a family member who is quarantined, or if you're taking care of a child because of school or daycare closures. Leave is paid at the regular rate, but it's for a maximum of $511 per day, unless you're taking care of a family member, and then it's at 2/3 the regular rate with the maximum of $200 per day. So importantly here, the federal government will reimburse the employer 100% of these costs up to a daily maximum that you pay your employees. This is a refundable tax credit, and so understanding that businesses often have liquidity problems as well, the Treasury Department is taking steps to allow businesses to request in advance on that refundable credit, so that you have the resources to pay employees who are taking the sick leave. So this is in addition to what the employer already provides, including what you provide pursuant to state and local law. And there's a lot of talk about businesses with fewer than 50 employees being exempt. So the law does provide that an employer may be exempt, but they can only be exempt with respect to leave that's tied to caring for a child whose school or daycare is closed, and only to the extent that if providing the leave threatens the viability of the business. So if you think this applies to you, you should check out the Department of Labor's guidelines that they'll be posting on their website where you can explain this further. We also have a new guide that we released over the weekend that I can get out to all the individuals on this call. So I guess also, so paid sick leave is generally not available for an employee where they can telework. So that applies if the employee is taking care of, for example, a child, they can also telework for, by like staggering their hours, not apply. All right, so the bill also includes paid family leave, or FMLA. If you're not familiar with it, it's the Family Medical Leave Act. So it's a law that generally allows for 12 weeks of unpaid leave. And what the Phase 2 bill did was say that employers with less than 500 employees, they're required to provide up to 10 weeks of paid family leave if the employee needs to take care of a child due to a school closure caused by the coronavirus. Now, that's the only reason for the extended leave. And when you think about this, with the interaction between this and the sick leave, an employee would take 10 days of sick leave first, and then would be eligible for up to 10 weeks of paid leave. Now here, the leave is paid at 2/3 of the regular rate. Again, a maximum of $200 per day, $10,000 in the aggregate. It is in addition to what you already provide under state and local law. Again, this is fully reimbursed in the same way by the federal government. And there are similar exemptions for employers with fewer than 50 employees, same as the paid sick leave, and it doesn't apply to an employee who can telework. So I know that was a lot of information, to digest, and I would point out that this is a big bill, so $2.2 trillion, nearly 1,000 pages, and the federal government is working, day and night to roll out some of these programs. It's a broad bill meant to include a lot of businesses and individuals. It was written very quickly, especially relative to how federal government and Congress typically write legislation. You see this was passed just over a week ago, and it includes quite a bit there. So there will be holes in the legislation. There will be hiccups in the rollout. I'm sure it's something that we're going to just have to deal with. Is the pure size and speed of this bill is just enormous. But we're certainly working with the government and with businesses trying to help kind of bridge some of those gaps that we see, and hopefully fill some of the gaps potentially in future legislation as well. With that, you can see on the screen we have additional resources, uschamber.com, where we're posting our updated guides, and also our website we call CO. It's for our small businesses. You can go to uschamber.com/CO. There you can find survival tips. Really, it's a website we're running year-round, and now we have a lot on coronavirus response, specifically for our small businesses. And with that, I'm going to stop sharing the screen here. And Tim, I'll turn it back over to you and open it up for some questions.
Yeah, fantastic, Kevin. Thank you so much. That was great, and we do have a handful of questions here, and I think we have enough time that we should be able to get through there. I'm going to start off with the first one actually that came up, and it was the $600 benefit apply to any sized employer. And I think that's going back to the unemployment expansion, or is it just for those employers under 500?
So it is for all employers, and it is a generous benefit. And from what I'm reading, they're opening it up to, this also applies to partial unemployment and the various types of unemployment that you could be applying for through the state. Now, I know state by state system, but this was designed kind of quickly to be just a flat $600 add-on. Is making more on on the unemployment than they were at their job, which could create certain type of situation. But the eligibility does run out, or the individual's ineligible once they're allowed back to work, or once they're being asked to return to work.
All right, fantastic. Another question here. What happens to the forgiveness if you go to bring back an employee and they choose not to come back?
So I guess in that instance, what they're gonna look for is your employee count relative to a look back period. So whatever that benchmark was. If that specific employee chooses not to come back, it may be a situation where you're hiring someone else to replace them, meaning there is work to be done and you could fill that spot. So they're going to look at the employee count relative to another period as opposed to that specific employee.
Okay. Is it your understanding that you can defer the payroll taxes from now until your PPP loan is forgiven?
For the payroll tax, so I think I talked a little bit about the interaction with the PPP loan, and it's a good question in terms of the timing, and I'll have to look into that. My understanding is that, so if you're taking out the PPP loan and you're waiting for the period between the loan and the forgiveness, deferring the payroll tax, I don't know. That's a good question on timing that I'll need to get back to you on, but I'm not sure if and that's kind of tricky. And then you have to pay it back immediately once the loan's forgiven, because you're not eligible for that deferment on the payroll tax if you're participating in the PPP program. I'm just not sure at what time that's initiated, if it's at loan forgiveness or loan origination. My original understanding was once your loan's forgiven, but going into the PPP program, you're assuming as part of this that you're calculating that loan to be forgiven. So let me get back to you on the specifics, but it seems like that would, if it was just when the loan's forgiven, it seemed like it'd be a difficult calculation to make there.
Sounds good. So let me ask you, so is an employer, would an employer be eligible for both the economic injury loan as well as the PPP? Could they do both?
Yes. So good question on the interaction here. You can do both as long as what you're seeking, the money that you use through the loan programs, aren't used for the same purpose. So you may have, for example, you're using the PPP to pay your employees, but maybe you have expenses, either a lease on machinery or that you have to make payments on, or other expenses that you can take out the idle loan to pay those other expenses. Important thing to remember is there's two kind of restrictions here. You can't take out these loans for the same expenses, and you can't claim for the Paycheck Protection Program an expense paid by the federal government as an expense you've incurred for part of that payroll. And that's where you get some of the interactions of the tax deferments and the tax credits. Sure.
So here's a good question as well, and something you and I were kind of chatting a little bit, and I think you've seen nationally banks, maybe not, so everything happened very quickly, right? And so getting banks and getting processes in place. And so this question that kind of comes through here is, should I be concerned my bank has not started processing loans yet? As of now, all I've been able to do is basically get a place in line. What do you say to those businesses? I think everyone's very anxious right now with what and how quickly the money is going to be deployed.
Sure. Good question here. And as a reminder for everyone on the line, this program started, application started last Friday, April 3rd. That was 1 week after this bill was signed into law. The government was rolling out a $349 billion program. That's quick. So I think at that point on Friday, the government released some of the regulatory guidance for lenders just, the evening before, with just hours to kind of figure out before opening the program. And I think a lot of lenders were still working through some of those regulations as of Friday, and they'll continue to work through this. I don't think there's any reason to panic right now if you didn't get through and get the loan. I know you'll see, tweets by Secretary Mnuchin who's adding up the amount that they've lent already. It's, I think, give the lenders time to work through some of this. I think it's a positive, that we got this program passed and that it's being rolled out so quickly. But with that comes some of these, just the timing of figuring out, going through regulatory guidance. Good that you have a place in line and that you have all of the, documents that you need already together. That's going to help speed up the process. Now, on Friday when it was originally rolled out, an important point is that was for small businesses and sole proprietors. Now, this Friday, April 10th, so if you're an independent contractor, you're self-employed, that's when you can start applying for the Paycheck Protection Program through your lender. And again, as much as you can, just be patient with that process. Continue the back and forth with your lender and allow them to kind of work through some of this guidance. But I know this week we're expecting to see on a rolling basis additional lenders added to this program, and in addition to some fintech companies that are looking to get in. So kind of an alternative, lending process if you're unable to secure a loan there locally. We're expecting to see some of those lenders added as well. So we have last week, the 3rd, for small businesses and sole proprietors, and then Friday of this week if you're an independent contractor or if you're self-employed.
Fantastic. So if an employer is approved for the payroll protection program, can they pick any of the 8 weeks between February 15th and June 30th?
So it's going to be, my understanding is that it's the 8-week period following the origination of the loan for your payroll, and that you're also going to be looking at so that 8-week period is what you're going to be comparing to the benchmark period in terms of whether you kept the same number of employees and what your payroll, your wages you were paying your employees were when they look at the loan forgiveness there.
Okay. I'm going to try and read through this. Was a little technical question here, but the interim final regs issued by SBA on the PPP loan mentions needing to be under 500 employees. And under the average gross receipts limits per Section 3 of the Small Business Act. Is this correct and the intent? So correct on the employee side. So it have to be under 500 employees. And the second part, so-called on the gross receipts, I don't know regarding the intent. I don't know. This is something that, could get back to you on in terms of those discussions that Congress was having, whether through leadership or the committees. But it seems to be correct. I get kind of the point of the question in terms of expanding this to others who would maybe not otherwise be eligible for an SBA loan. And if that's the case, let's follow up with the individual who asked that question to see, check their eligibility or get to the bottom of that. Sure, absolutely. And we'll work with Kevin as well on some of the information he shared here and some of the additional sources, and we can make sure we get that out to all the participants from this morning as well. So I'm going to move on to another question here, and if I've asked you this, Kevin, we can skip over it, but I think it's a new question, maybe slightly similar. But is it your understanding that you can defer the payroll taxes from now until your PPP loan is forgiven?
So I think this is one that we did cover,
okay.
And one that I'll follow up on. This had to do with the timing of. So basically, you're ineligible for that payroll tax deferment if you have the PPP loan, the forgivable loan, and they're asking about the timing of that. So whether it's when the loan's originated or once it's forgiven, and that's detailed of the mechanics of how this is working. Where I don't know, but I do know that you're ineligible for that benefit if your loan's forgiven under PPP, and I'm just not sure of the timing, whether it's origination or at loan forgiveness.
Sure. Okay, fair enough. Should we be deducting the federal withholdings and taxes, such as Social Security, Medicare, from the average payroll calculation?
So this is a good point. And I think I mentioned this guide here, but just so you know, because a lot of these questions as we go through the webinars, I just refer back to that 4-page guide that I was talking about. Mm-hmm. And there it has a list of what is included in the payroll cost and then what's excluded from the payroll cost. So I just go through this list here. We have the salary, what's included in the payroll cost. We have salary, wage, commission, or similar compensation, payment of cash tip or equivalent, payment for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payment required for the provisions of group health care benefits, including insurance payments. That's a question I get quite a bit on the health insurance side. So payment of any retirement benefits, and then payment of state or local tax assessed on the compensation of the employee. So what is excluded from that payroll cost? Number two, if you're going through that list, you see is payroll taxes, railroad retirement taxes, and income taxes. So I think for the question, that is not something that is calculated.
Sure. Okay. So here's a question as well, and I think as every small business and every employer kind of going through this and navigating it, advantages, disadvantages for taking either one of these types of loans. What are those couple of things that you might just advise employers to be careful of?
Yeah, so I want to be careful about advising here. I could lay out kind of what we know, what's in the bill, without knowing all the individual. Without knowing all of your individual situations. This is something you're going to want to talk to, your accountants about, and to the lenders and all those other parties that you're looking for counsel. But I would say that the way it's designed is for this Paycheck Protection Program to be really most favorable in terms of small businesses. So I would look there first, mostly because this is you have the potential to have this entire loan forgiven. Everything that you're taking out, and I don't know that there's a program like that that's matched. I also think the benefit in the EIDL loan. So I think we talked a little bit about this earlier about looking at the interactions and what you can use the loans for. And this is where you want to kind of dig in and sophisticated use. If you want to keep the doors open and continue paying employees, look at some of those interactions in terms of using the PPP for paying the employees, and perhaps you're using the EIDL loan for another purpose. And when we think about the goals of these programs too, remember, it's Paycheck Protection Program is exactly that. We want to see small businesses continuing to pay their employees. I have received some questions, and it may be in the list too, about how the unemployment works with some of these programs, because really the Paycheck Protection Program is you're encouraging employers to continue paying employees, but if you have that additional federal benefit, what does that look like? Do they fall into that category of receiving an additional federal or receiving an additional benefit because of unemployment, right? If you're not paying them, you won't have that compensation on the Paycheck Protection Program. Those are some of the tough questions when we talk about the design here, and some of the things that I don't think were, that Congress was able to consider that quickly from beginning to end and include everyone, where you're going to have some of these tough situations where it doesn't necessarily add up. So that's something to keep in mind. Another point to consider in terms of when you're looking at these programs is if you're an employer who uses a lot of independent contractors, the way this is designed is that you can't include those independent contractors in your payroll expenses, right? Because the thought is that independent contractor can also apply for the loan, and we want to avoid, claiming the same expense for, twice. So if you do work with independent contractors, I guess you can, if you're an independent contractor on the line, do know you're able to apply for this loan. You're able to apply for the PPP on your own. But unfortunately, if that's the case, and that's the way that your payroll is kind of organized, you're not able to include that independent contractor currently on the Paycheck Protection Program.
Thank you, Kevin. So let's think about this. I mean, $350 billion is a large amount of money, and getting all of those dollars dispersed and into the employer's hands, into the business community. What happens when this 8 weeks kind of roll through here and we get into May, we begin emerging from here? Do you foresee another phase, like a phase 4, coming from Congress to kind of continue some of the economic stimulus?
Yeah, that's a good question and a fair question. I know I've heard from some small businesses that have, and I think this was kind of alluded to in another question of if I'm waiting for this loan, some of that anxiety of will this program run out of funds and that's something, we're going to keep a close eye on. I would remember that Congress and, the U.S. Chamber work very closely with Congress and on a lot of these provisions. And, the $349 billion for the Paycheck Protection Program, that was a good faith estimate of what this program might cost for all eligible participants to apply and receive that forgivable loan. It may not be enough. This is an estimate. And if at the, down the line, if we approach that limit and it's not enough, I do think, given the way Congress has quickly addressed a lot of these situations, this is something that they would revisit, especially if they see that this is helping. If small employers are and small businesses, if they're continuing to pay their employees and this program is working as intended, I do think that they would revisit and look to, inject more capital into the program. And this is the case on a lot of what's included in this bill. Remember, it's $2 trillion. It's going to take a lot of work and some time to roll out some of these provisions, doing this as quickly as possible. But look, we're all, dealing with this on the fly, getting information by the hour, and Congress is no different. From my conversations with members of Congress, senators and House members, both sides of the aisle, they're all, focused on implementing this phase 3 bill. Mention the size. They're focused on getting this done, but also open to, down the line, coming back and taking a look at where are the holes? Who did we miss in this? Who's still struggling? Did the programs have enough funding? And especially on the healthcare side, I should mention, in a lot of these conversations, they want to make sure, because let's not forget, so we're going to talk, at the chamber, we're talking about economic impact. We're talking about keeping businesses open and employees paid. But also on the healthcare side of this, they're going to be looking at, okay, do we have enough for the healthcare systems? Are we, helping to protect, healthcare workers, things of that sort, and a lot of the funding that was available, to help on the healthcare side and in the legislation as well. That's something we'll be taking a look at. But certainly don't rule out the possibility of expanding some of these programs if it turns out that we need to do that.
Sure. So here's a specific question on the sick leave and FMLA provisions. And somebody was looking and hoping that you might be able to clarify teleworking. And I'm assuming that is, how do you define an employee who could work and telecommute versus one who couldn't? Is there any sort of clarifications in the bill on that definition? So
my understanding is that if the employee can telework, then they're not eligible for that sick leave or the paid sick leave. Now, the one important, caveat there is when someone's able to telework, but then they're also caring for a sick family member or a child whose school or daycare has been closed. And this is something I want to dig in and go a little bit closer on, because that interaction in terms of being able to work your hours around caring for the child, and then how that interacts with the requirement to offer the paid, or whether or not they qualify for that paid leave. And that's something I'll follow up on. But I think we just released a couple guides, which hopefully will help clarify some of that, which I'll get to you, Tim, right after this.
All right, sounds good. And then just once again, we'll work with Kevin and some of the materials we have today and that Kevin has referenced. We'll make sure we get those out to all of the participants this morning as well. There was a question that came up here, and the type of documentation, Kevin, that employers would need to work with their CPA in filling out the loans or the unemployment papers.
So for the loans, you're going to want to look at your tax, whatever you've submitted for your tax filing, either last year's tax filing, if you've already submitted this year, or if you're submitting kind of on a quarterly basis. That's like the first step, what you're going to want to prepare there. Also, if you haven't, or if you just started the business, maybe beginning of this year, you don't have filings, you want to look at in terms of dating your payroll. Maybe you use a third-party vendor, and that they're producing these numbers for you. You want to prepare some of those documents. So I think tax, number one, and then working with, I don't know if it's the companies that are out there like Paychecks or who can kind of prepare some of these documents if you don't have the tax documents to kind of back up that information.
Fantastic. And, I think we've made it through almost all the questions I think that were submitted. I think maybe just one last question here, and then I'll let you maybe kind of wrap up. But so there are going to be those employers that are probably going to go through the process and for whatever reasons may be denied what that loan might look like. What happens next for those employers? Is there an appeal process through here, or do we feel confident that the majority of the folks who are applying here are going to receive some type of loan, grant, or incentive?
This is a good question and a good one to end on, especially as we find ourselves in this moment right now where we just opened up this program on Friday. And while lenders are still being added to the roles, we're building this plan as it takes off. And an important point, so I've been hearing these stories, if a business has been denied that loan, all right, so you're going to want to look at why were you denied. Now, I'm hearing from some lenders that what they're looking at and just to understand kind of what they're dealing with is they're offering these loans. These are supposed to be turned around very quickly. The eligibility requirements in terms of the documentation that you're providing is not as in depth as you typically have to submit. So the lenders are still operating under some of the requirements that they have on the liability front. So requirements to know your client and some of this anti-money laundering, rules that are out there. And so I think initially what I was hearing was banks were prioritizing or accepting loans from clients that they already have a relationship with, so that they're already lending to because they know that client, that's a safe loan to be made. And some of those denials may be coming through because there's no kind of pre-existing relationship there and not enough time to establish it. And remember, for the banks, this is a lot. This is a lot of applications that are coming through and just the volume. And so this may be something they had set up to clear the path for existing clients because they don't have that liability hurdle to get past. So if you were denied the loan, I would take a look at go and look back at communicating with the bank if you can in terms of why you were denied the loan, but also keep in mind that this maybe you go to another lender and you look for lenders will be continuing to be added to this program and participating in this program. I mentioned that we have fintech coming online here. So throughout this week, and then if you're an independent contractor or a self-employed, you're going to be getting the documentation prepared for Friday. But throughout this week, if you've already applied and were denied, continue looking at what other lenders are being added here, reasoning behind, the denial, and then because it may just be a case of this is who at this moment that bank is accepting because of the requirements on their end, and you may have to look at another lender there and to establish, that relationship. Remember, there's a difference between who you're banking with personally and who you bank with through your business. That could make a difference. But I wouldn't give up on it if you were denied, especially over this past weekend with all of these questions that are still out there.
Okay. Kevin, thank you. As we wrap up here, any final thoughts for the participants and attendees this morning?
Yeah, I think I would leave it here. I know we've gone over a lot of information today. I know there are a lot of questions that are still out there, and some of them we don't have the answers yet. It's going to be a very frustrating time. Let's look at the good news is that this bill passed. Congress acted quickly, and now the government is similarly acting quickly to roll out these huge programs with all of the necessary regulations and guidance. It can be frustrating. I would encourage everyone to be patient and to remain vigilant on all of these programs. Take some time to look through them. Ask those questions because those questions are what's helping to shape the government's rollout of these programs, and it's what's helping to shape the U.S. Chamber's position or our advocacy in helping the government roll out these programs. But I do encourage some patience and look to take advantage of these programs. Ask those questions, and we'll certainly look to get you all the answers you need in order to evaluate what will work for you. Hang in there. We've got your back. Lansing and Jackson Chambers, they have your back. And I do appreciate you having me on this morning and look forward to continuing to help, in a difficult time.
Kevin, thank you so much, and as well to all the work that your team there at the U.S. Chamber is putting into this. You guys have been amazing for all of your members and all your businesses, not only across the country, but also all the local and state chambers as well. So thank you. There were a few specific questions related to state unemployment that popped up there as well. We will do our best, and we follow up with all the attendees this morning. We'll have additional information. We've been communicating that out, and that obviously has been a very challenging aspect, I think, for every state right now, and how their systems are adapting to the increased volume there. But we'll make sure that we send some additional information out with the follow-up communications on some of the state unemployment questions, as well. Again, to our partners at the Jackson County Chamber, thank you for joining us this morning. And then for everyone else that participated in today's meeting, we certainly appreciate it, and hope everyone is doing well. And we've had some sunshine here the last couple of days, and hopefully you've had an opportunity to get outside and enjoy some of the nice weather as well. So thanks much, and we'll talk with everyone soon.